Hello, welcome to Mall Talkers. I'm Michael Paskett, aka The Mall Guy, and this is the show where retail and mall pros come to talk shop. In 30 minutes or less, I'm bringing you conversations from the strategists, the operators, and innovators driving the evolution of malls today. You'll leave with tactics, stories, and trends shaping what malls were, where malls have been, and what they're becoming. So pull up a chair, grab a coffee, and let's chat some malls. So today I bring you another mall legend. As a guest, Andrea Hipeco, Head of Leasing Europe at Multi Corporation. Today's topic, leasing, how to stop filling space and start allocating capital. Andrea, how are you doing today?
Hello, everyone, and thank you. Thanks so much for the invitation. I'm very happy to be here and to explain a bit of me and what I'm doing actually.
Super excited to have you. You come very knowledgeable with this in the space, having done it for a very long time. Can you tell us a little bit about yourself, quick background, who you are, what you've done, what you're working on?
Basically, it's more than 18 years that I work in retail real estate. I started from the high street. I worked also for Sonae Sierra, which I think you know, for Neinver, which is one of the biggest outlet operator in Europe. I worked in Unibail-Rodamco-Westfield in Paris with an international role as in Neinver. And then I joined CPI Property Group. So it's a retail park, basically, expansion in Europe. I was managing director there for the expansion. And today I am Head of Leasing Europe in Multi. I oversee 15 countries for the leasing operation. And we have something around 5 billion of asset under management. And roughly only malls, we are 60 plus nowadays. So that's it what I'm doing now. But I think that I want to add that my role is changed a lot. I think in the last years, the industry needed a change. And as I used to say, the question from the landlord has changed. And before the question was to who we can rent this space and how much. Now the question is which brand can generate value for our asset and guarantee long-term cash flow, durability, stability. So that's why I am also here, because I'm happy to speak about how we are evolving.
Oh, without question. And we were talking a little bit before this call. Things are changing, things are pivoting. How should landlords evaluate tenant profitability instead of only OCR?
Yes, this is a good point because the industry relies it's a lot of time now on the OCR, but the reality is that the same tenant in the same mall can have the same OCR and very different EBITDA result. And in the end, retailer evaluate the profitability through their net result, through the EBITDA. And the fact that we are still using the OCR is hiding possible move or change of the tenant. So when we saw normally in the industry, okay, fashion is 12%, we are happy, but this means nothing because nowadays with the pressure from online, cost raising, Iran war, cost change, and so the margin change. And so it can be that you look at the LTOCR and you are comfortable, and in reality, there is something that is not working properly. But also, if you start looking at the EBITDA and start understanding how the retailer thinks, you can understand that maybe store is oversized or undersized, because it can be that adding 200 meters will give you more possibility of, I would say, merchandise per square meter, but at the same time will increase the FTA cost. And this depends on the model of the tenant. Let's talk about two main examples, which are very different, the way of operating Zara and New Yorker. So Zara today is going to premium, so less merchandise per square meter, higher price. They are raising price every year.
Yep.
They are moving to a more assisted sales for the customers. So on one side, they are enlarging volume. On the other, they are increasing the cost. So the store profitability in the long term of Zara is different from, for example, New Yorker, which is just, I would say, having big space with a lot of merchandise, basically no client assistant, and zero online sales. They are absolutely against online sales. This
Interesting.
doesn't mean that Zara will disappear, but means that if I look at Zara nowadays and say, why it will last? It will last because Mr. Ortega, which is a very, very smart guy, obviously, he invested last year something like, I think, 15 billion euro
Yep.
in harbors and logistic. Why? Because he knows that this premiumization will enlarge the cost on the store. And so to protect the margin, he is doing this movement. So this is why I say, and this is something you cannot see in OCR. You can see in the business report, in a financial analysis, reading newspaper. So it's more complex now, the reality.
That's fascinating. And it's absolutely more complex than it's ever been. But it's also simplifying in a terms with like how it should be. When does a lease create value versus destroy future NOI?
For me, lease creates value for both parties when the sustainability of the rent, and so the final net result of the tenant is positive and can guarantee a long-term lease and cash flow without disruption.
Mhm.
Because, as we discussed it previously, sometimes having less MGR today means giving the tenant much more possibility to invest in the store of tomorrow.
Mhm.
And having the latest concept, when a brand say, where I want to have my latest concept, they will not look simple at the volume. They will look also at the profitability because they invested a lot of money to open. Yes, we give them fit out, but in the end, they put money in it.
Mhm.
So they look at it and say, okay, I'm here. 5 years. And in theory, if you look at any manual of retail, it says that every 5 years you should renovate. But if you look at malls, it's not true. There are malls where you can see concept of 20 years ago.
Yep.
Why?
True.
Because they are still absorbing the cost of creating this shop. So if I have this situation, I am creating value and also the famous experience for the client and securing my cash flow. Versus if I always try to push to have better, higher MGR because I am obsessed by the exit cap rate, by the valuation.
Yep.
Okay. In the end of the day, I will finish, and I say this against my interest because as property manager, as we manage also for third party, and as leasing, every time I sign a contract, you pay. So I should be happy, I would say, to change tenant every 3, 4, or 5 years. But this means that you pay me, you pay capex because of course you have to reduce shell and core.
Yep.
You have a vacancy period that depending, and anyhow, if you are a best-in-class asset, you will have the famous 3, 4 months of working. So less cash, less more investment on the lender side, less stability, less possibility to have a new concept in the mall, and so less experience, and the value will erode in the long term. And we can see this because when I visited last time some best-in-class malls, I don't want to say names because I have still a career in front of me, I hope,
Fair.
but there are some triple A malls in Europe today which they have vacancies. And the crazy part is not because they don't have requests. It's because the ERV, which we know in the end is a financial instrument to evaluate the possible value of the reletting of the unit, is not aligned with the current market value. So they prefer to have a unit vacant than to have a lower EMV that will impact the valuation. I mean, this is crazy. It's like saying that Amazon will decide not to lease a space for somebody to sell and advertise his goods because this guy is paying less. And so when you click, go to the second page, the page of, I don't know, socks, it's blank because the guy of the second page, they pay less. And so they are not there. This is the moment when the finance should now have a reality check on where the money are coming, which is retail, and start approaching differently the way they invest and they think how an asset will develop in the future.
Without question. So then how should leasing teams think about risk pricing?
For me, a leasing team, which is functioning well, first of all, is a leasing team where everybody understands two things. The landlord side, which means that to my team, I always try and I encourage them to study what is a discounted cash flow, what means an ERR, what means yield on cost, and because these are the benchmark that the lender used to evaluate the deal. And on the other side, I encourage also them to study the functioning of every retailer, to dig the information, to have the best possible information, to have a correct P&L. I even built an Excel model for my team, which is on one side calculating the P&L of the tenant, and on the other side the ERR for the investor. And then you have a table where basically you can see changing the rent and the fit out contribution and the duration or whatever. You have several green dots where you have the equilibrium. So where the deal is in the correct range for both. And this means that this is how you mitigate the risk, because you calculate both sides. And a lot of people asked me, and I will post this on LinkedIn also, because they told me, yes, but how you know the P&L of a tenant? Okay. First, we are in 2026, so we have an amazing instrument. We can do EI deep research. So if, for example, I want to understand how a brand like Rituals or Zara works, I have to take first the financial statement, read it. I will find things like how much is the average margin of the company, where they are going, what is the EBITDA target. And with this, I can have an idea that, for example, a shop to be considered profitable should be in a certain range of EBITDA. Yes. Regarding the other costs, which are FTE, for example, number of employees, okay, this is depending on the merchandising mix, and the GLA and the opening hours, and then it's quite simple. It's like mathematical. It's the way they do also in retail. And then you have the OPEX, which are the costs that you can have, like POS, like little repair, like whatever. And this is a percentage that you can easily find in the report of all the countries divided by categories that say, for example, fashion store, you have 6% OPEX on your turnover, etc., etc. So this kind of data you can find. The question is, and this is something also I am preparing a detailed analysis on that, is my model more reliable than the OCR one. So how much is the margin of error of my way of thinking and the OCR? And the reality is that on the OCR, I analyze the same tenant. I can have huge difference, like $500,000 different in the final result for the tenant, while in the EBITDA, I will have maximum 4-5% deviation. So I am not able to calculate as they do because I'm not them, but I am really near the truth. The point is always to research and to look for solution. And thanks God again, today we have great instrument that can do research for us fast, that we can double check, triple check what we are looking for. So
that's absolutely fascinating. Like, I off camera another day would love to see that Excel sheet and just see how it works. This is a good era for all of us. Like, data is more available. We can use different AI models. We can use research. And what it sounds like is it's doing the due diligence, understanding both sides, understanding everything to create a calculation or a table to at least understand the different risk environments when going into these conversations. So then how do asset strategy and leasing strategy begin to merge?
So basically, in my view, nowadays there is no great difference between an asset strategy and the leasing strategy, because the main point is that if you think about a lease, is a long-term investment on the lender side in exchange of a fixed return. So this means that every lease is a capital allocation business. And on the other side, and this is true since years and years, when you assess if buy or not something, the commercial due diligence is still the main document, because is there that you can see I can extract value or not. I can invest, I don't know, 2 million on this asset to insert Primark, and then I will have more footfall, and then I will have this pollination effect or whatever. Or no, I see data that told me that the asset is already under stress, so I have to have a different value or yield when I enter in the asset. The goal, I think, is also for the future is to have more integration, because between three, I would say main four functions that today they are a bit disconnect, that are asset management, leasing, marketing, and then the operational side team. Because also in this side, no, you talk about strategy, but usually what we have done before and what we don't do anymore is leasing, sign a deal, the contract start, and then we see each other if there is a problem. This is the life of my colleagues everywhere in the world, also mine. But this is not how it should be. No. Because if you look also the best-in-class operator in Europe, they have what we call key account manager, which is an important role for me that has to be implemented in the future. And the role is to keep a communication with the brands, which means to have regular meeting to review the performances, to review how things are going in their shop, and also how they are going against the other shop. This I call business overview meeting, meaning we share. So we say, I don't know, you are doing +5, the same sector is doing +3, and the mall is doing +6, and blah, blah. And this means that you are below or in line. We are doing this marketing during this year. We are opening this store during this year. What do you think? And then on the other side, they also explain their strategy, what they are doing in this country, in Europe, what is the plan, what will be the next chapter for this company. If you have this chat every 6 or every if you don't have time every 1 year, this already will change the relationship. And what permit to do is also to insert marketing in this and the center management, because the center manager wake up every morning, he can see the store is clean, the people are there, are not there, how is the experience, how is the merchandise, are they fulfilling it with the latest collection, or is used like I don't know, like a storage. And this impacts sales, which impact turnover rent, which is again income.
Yep.
And the marketing also, with the instrument we have now, we can launch campaign, co-brand campaign. We can even message our client directly in app, send them promotion, and the tenant can do directly with just a click. Okay. So when I have a meeting, and I have an example, I had a meeting 3 months ago with a tenant. They had a problem in an asset. The sales was not good. They ask a discount. I say, okay, before discount, let's look. Okay, you didn't participate to marketing campaign. I look because I have the data traffic analysis. So I see that the people are passing and they are not entering. You are not converting. And on the same, but you are in the one of the best place of the mall. So what is the problem here is that we have to communicate more that you are there, because this is also a strong brand. It's a very strong brand, by the way. So we are agreed to have this campaign, and after 3 months, the sales immediately start growing and growing.
So cool.
And the discussion of the discount is not here anymore. So that is for me the real way of managing an asset and do active management of an asset. And also this is the way leasing managers in general learn more. Because when you are in this meeting with brands, they explain you things. They tell you, sometimes they tell you numbers like, oh, you know, our average ticket is. This is the number that you have to write on here. Because if you have the average ticket of any brand, you can calculate, because usually they declare only the sales in the malls. We are not out of business, unfortunately. You can calculate how many clients they have. And this is important, because when you decide if you have to decide, I want to have this brand A or B, I want to understand how many customers this guy will bring and which type of customer, because I know their ticket, so I know the type of spending, I know my marketing research, I know my spending, and then I can match this, and second, I can understand the footfall that I can have. So this is why I would say it's a mathematical model on one side that you should have, but there is also the relationship part, the partnership that should exist and become fundamental. Yeah, we are not anymore buying and taking rent. It's over.
I would agree. I do have a lot of conversations similar to that. Like the days of landlord occupier, and then they just kind of part ways and do that. Like it's gone. It is a partnership. It is almost like an ecosystem. Like it's living and breathing. For one to do well, the other has to do well, and it's collaborative in nature, because that's where everyone wins. In the model of landlord occupier, just kind of part ways, there's disconnect, especially at a portfolio level or a mall level. What do you see as a leasing director role looking like 5 years from now, 10 years from now? Because things are changing. I think that much is apparently clear. We're in the middle of this pivot, in the middle of this change. Where do you think it'll land in 5 years with the new models, new AI, just everything shifting in this day?
There are two things that I think are important to say. The first is that I think that our role will not be anymore defining as leasing manager, but commercial manager.
Oh, interesting.
Because this is what we should do. Because if you think about a commercial director, for example, is somebody who understands not only the industry that is producing, so the real estate part, but is also knowing the industries that are buying the parts that this industry is buying.
Mhm.
And is part is a strategic part in the business to take decision on where to go, because it's a commercial function that is not just lease, is something over. And the second is that I believe that in the future we will see in 5 years assets which are still full occupied, but with a problem underlined, with the same brands, no evolution there, and we will see other assets that they will take this shift and they will evolve. They will have better brands, more sustainable cash flow, better income, and this means more possibility to invest, to renovate even the asset, and so on. And this will be physically visible. And what I would love to see more in the future, this is my hope. We talk about ESG. I always underline the importance between the community and the center. And for me, this means that we should give more importance to local brands and give them the possibility to express themselves.
Yep.
Because between them, there could be the new Zara. Mr. Ortega first boutique was 150 meters in La Coruña.
Yep.
Is still there.
Oh, I'm sure.
And this is a normal shop that can be a shop that you pass by in your street every day.
Mhm.
Today is a giant. So why not to take the little risk to dedicate a unit to constantly test new brand with a lower MGR, but with the possibility to discover something that I can develop and be the first in believing it.
Mhm.
I remember the word of one of my friends in the industry, Laurent Pivetto of New Yorker, who told me, I like a lot to do business with this company because they were the first believing in me. So I pay to us a better rent than to the other because they were the first.
Yep.
And this also is important for me to create a long-term asset that will stay.
Long-term relationship, long-term asset. I could listen to you all day. I want to say thank you for taking the time, first and foremost. Very well knowledgeable, know a lot within the space. I will say, do you have any parting words before we cut this out?
What I want to say is very much to encourage everyone is working in our amazing industry to remain curious, to ask always why, and always challenge the status quo. I don't know if my approach of EBITDA it's the solution for the requirement of the market to be more safe on the income. I don't know, maybe there is a better way, but I encourage everyone to challenge the status quo. Also, if OCR are there since a long time, doesn't mean that they are covered. In science, in physics, everything change, everything can be discussed, and we should keep being curious.
Well said. Well said. I want to say thank you so much to all the listeners. We'll put in the link to his LinkedIn. He has many good posts, many outstanding person to follow. I want to say thank you again, Andrea,
Thanks to
for
you.
taking the time. Thank you. Thank you.
And
to the Mall Talk. Oh, go ahead. Go ahead.
if you will have some question from your audience that they want to better cover, just ring the bell.
Definitely.
Okay?
Might even be a part 2.
Yes.
Cool. Thank you
Thanks
again,
so much.
Mall Talkers.
Have a
Thank you.
great day. Ciao.
Ciao.